If you're still buying the New Zealand dollar this week, you could be trading against the big boys and the big players in the market. Here is what caught my attention. Over the last week, institutional traders started reducing their buying positions on the New Zealand dollar. While they were reducing it, they were quietly adding new positions into another major currency that most retail traders are still selling or they are being bearish on. Now, that kind of shit isn't something I ignore because um, that often shows where the next big money begins. Now, I want you to stay with me. By the end of this video, you will know exactly where institutional money is flowing, the one currency pair I am watching this week, and how I am planning to trade it before the crowd catches on. Guys, this is the moment you've been waiting for. After going through the institutional data, filtering out the noise and comparing where the biggest players are positioning themselves, there are majorly two trades. Well, we're talking about one. There's one trade that stands above the rest for me this week. My institutional trade of the week is the pound trading against the yen, which is a sell direction. So I'm giving this setup an 85% confidence rating, and here's exactly why. Number one, the Japanese yen is getting stronger. Institutional traders added about 1,000 new dollar contracts this week. And that's a clear sign that the big money is moving into the yen as demand for safe haven currencies continues to increase. My number two reason is global risk sentiment has changed. The ongoing tension between the US and Iran are pushing investors towards safe havens, safer havens. Now, when uncertainty rises, the Japanese yen is often one of the best currency institutions buy. And the third reason is the British pound is facing uncertainty, and the UK has a new elected prime minister, and institutional investors are still waiting to see how the new government economic policies will unfold. Now, until confidence returns, the pound is likely to remain under pressure. It is likely to remain under pressure. Now, when you combine a strengthening yen with a weakening pound, you get a high probability institutional setup. So based on the current positioning, I am expecting the pound Japanese yen to move around 226 this week. And if this move doesn't get filled this week, I'll be expecting that bearish momentum to continue into next week. Now, institutional position has given us the direction, but before we risk a single dollar, we need to do what we need to make sure that the chart agrees with everything we have seen so far.